welcome back. The purpose of this video is to demonstrate how to prepare a worksheet for a merchandising entity. Let's get started. In this problem, we will be utilizing a worksheet for a merchandising entity. In case you need a little brush up from Accounting 100, the worksheet is an internal document or tool that we use to gather all the various adjustment data to put it all in one area in the hopes of giving the owner or owners a preview of what their financial statements look like prior to actually preparing them. So, in order to begin this project, you should have entered Canvas, you should have found and read the directions for problem 4, you should have downloaded the Excel file, and we'll work together on starting this worksheet. Of course, at any time, if you need help, all you have to do is ask. So the objectives of problem 4 are to prepare a worksheet for a sole proprietor using appropriate techniques, and then be able to answer what-if scenarios, to be able to prepare financial statements. By the way, hear me when I say this, I expect those financial statements to be 100% cell referenced. That means I should see no numbers on the formulas tab that you're going to create. I want to see 100% cell references. This is so that if you make one adjustment in the worksheet, all the financial statements will automatically adjust themselves. And of course, you'll be creating a chart. So to refresh your memory, the accounting cycle is a series of steps needed in the life of any business. And specifically, we're going to work on the 4th step in the accounting cycle, which is to prepare a worksheet. So you'll notice by the diagram that we would have already journalized and posted the transactions and gathered a trial balance. In fact, on the worksheet, you'll see that the first few columns contain that trial balance. Now we're going to gather all the adjustments and prepare financial statements in accordance with the accounting cycle. So here's an example of what a worksheet might look like. This is from your Accounting 100 book. You'll notice that there are 10 columns, and the first 2 deal with the trial balance numbers. Those have been provided to you in the problem. The most challenging part of the worksheet will be to gather all the various adjusting data that's used to update the company for the end of the period adjustments, which will usually be comprised of both deferrals and accruals. You learned about those in Accounting 100. If you've forgotten them, you may want to consider grabbing an old textbook or Googling, or you can even go to my Accounting 100 website and pull up the document for Chapter 5. That may help you out. And also for Chapter 12 in the Accounting 100 text. That's where a lot of these adjustments are also introduced. So you'll notice that the columns balance in the first 6 columns, the debits equal the credits. But when we get to the income statement and the balance sheet columns, you'll notice that the same net income number that I'm circling here on the diagram will balance out both sets of columns if you've done this correctly. So let's keep going. Once we're finished with the worksheet, you'll be challenged to prepare a set of financial statements. So I'll come back to this slide a little later. So here we have our worksheet, and again, the trial balance numbers have been given to you. Our first point of business is to drop in the adjustments that are described in the directions onto your handout. For example, letter A says supplies on hand were $350. So go take a look at your supplies account. Here it is. There's $2,370 in there. And they're telling you that what should be in the account at the end of the fiscal period is $350. Some of you will want to make that adjustment right here for $350. But read it carefully. It doesn't say supplies used up was $350. It says supplies on hand was $350. So we need to determine the amount of the adjustment. It may help you to look at a T account, so I created one over here. If the balance in supplies is $2,370, that comes from your trial balance, and the amount should be $350 sitting in the ending balance, that means they probably took account and found out that the amount of supplies in the closet was costed at $350, then what you're interested in is the amount used up. So if you take your calculator or your Excel spreadsheet, you would take the $2,370 that's in there now, subtract out the $350 that should be in there, and the amount used up is $2,020. As you can see by the supplies account, supplies is an asset which is credited for the account when the asset goes down or is used up. So we'll make the adjustment for $2,020 by crediting the store supplies for $2,020 and debiting the supplies expense. In the skinny little F column, you should put the letter of the adjustment. That'll help you find any mistakes you may make. So now I'm going to go find the supplies expense or the store supplies expense and drop in that amount. As always, the debits need to equal the credits, so before I go any further to ensure that they do, you want to go check the bottom. I thought I would have you fill in those formulas, but apparently I did it myself, so that's good news for you. So we'll move on to the second transaction. Letter B is talking about this insurance premium here. So letter B says the insurance premium was paid on 5/1/17 and was for a 6-month period. Record the amount that has expired. Okay, so in the prepaid insurance account is $7,450, and it was paid on 5/1. So the question we need to ask ourselves is, how much of that 6 months worth of insurance has expired? We are using a 6/30 or June 30th fiscal year end. So that means that May and June have expired. So to compute the adjustment, we're going to take the $7,450 and multiply by the amount expired. In this case, 2 months out of the 6 months have been used up. That would be May and June. So when you calculate that either on Excel or on your calculator, we'll get $24.83 and some cents. When we're doing worksheets and working with financial statements, let's just drop the cents. So our adjustment's going to be for $2,483. $2,483 will be credited to the prepaid and debited to an insurance expense account. There it is. So I have those adjustments in. I'm going to let you do the rest of the adjustments, but I am going to help you with letter E because sometimes we forget how to do the adjustment for merchandise inventory. In fact, some of you may not have covered the appendix in your Accounting 100 book, so let me back up and work with you for just a moment on adjustment C. And adjustment C deals with the bad debt. And GAAP says we have to make a measurement of the amount that we expect to go bad and to appropriately match that expense with the revenues or the sales that have happened in the current fiscal year. So on the screen, you'll see the amount of sales that we had, and the rate of uncollectability that they provide is 1.5%. So I can enter it as 1.5%, or I can enter it as a decimal. And when you multiply the two of those together, the sales times the rate, you will get the bad debt adjustment. In this case, it's $6,831. That's the adjustment we need to record. So we're going to come over here and debit the bad debt expense for $68.31. And that was letter C. And the credit would be to the contra account called allowance for bad debt. So I'll come up here and put in the same amount, the $68.31. And that'll help you out with adjustment C. Let me put the amount in instead. $68.31. There we go. So now let's go check out adjustment E for the merchandise inventory. What we have in the T account is the amount sitting in the inventory when the trial balance was prepared. On this problem, we are using a periodic inventory system, and the reason I know that is because of the existence of this purchases account. So that means that the inventory is only adjusted at the end of the year when a physical count is taken. And it's done in 2 steps. Take out the old and put in the new. So to remove the old inventory, we're going to credit the account for the same amount, and we'll put it in the income summary account. So if we credited merchandise inventory, we will debit the income summary account, which is like a dummy account or a junk drawer that we use temporarily to hold the numbers until the accounting process is complete. So what we just did is we removed the old, and now you'll notice that my inventory account will foot to 0. So now we need to put the new back in. And based on the directions in your handout for letter E, the new inventory totals $68,800. So the journal entry for that is to put it back in the asset and to put the credit side in the income summary. And that puts in the new. So we're going to put that on our adjustment worksheet by following those 2 steps. So again, we're going to do it in 2 steps. Take out the old, put in the new. So the first part of letter E is to remove the $47,964 to take it out of the merchandise inventory, and you noticed here now that the balance in the inventory is 0, and to put it in to the income summary, $47,964. The second part of that journal entry is to put the new inventory back in, to bring inventory up to what the physical count and cost said it should be, in this case $68,800. So that requires 2 different amounts, $68,800. And that should be enough to get you started on the worksheet. Notice that these column totals should always equal at the bottom as you're making the adjustments. The next step on the worksheet after you've completed the adjustments is to take the trial balance numbers and drop them in to either the income statement or the balance sheet. Remember that the income statement is only for revenues, expense, and income summary, and everything else by default will go on the balance sheet. So I'm going to color code this to make your life easier. Here's my first revenue account. These are expenses. These are expenses. Got to be careful because there is a balance sheet account, a couple of balance sheet accounts here. Interest receivable is a balance sheet, so I'm going to skip that. These are the items that would go on the income statement. Here we go. Everything else by default will go on the balance sheet. So when you prepare the next part of this worksheet, make sure that you put the columns in the numbers in the appropriate columns, and this should be 100% cell referenced. Now I haven't made the rest of the adjustments, but I am going to demonstrate the next steps to you. So for example, I'll start off with my income statement. I don't want to put a number here. I want to put a cell reference. That way, when someone makes an adjustment in another month, everything will automatically update by itself. So for example, from the sales number, I'm going to press equals and I'm going to go grab the income from sales and press enter. And when I get to the next line item, which is purchases, I'm going to press equal and I'm going to grab the line item, which is in H23, and press enter. That way, if anyone makes a change, everything should be captured on the worksheet. So that's how you're going to do the income statement and balance sheet. Let me scroll up and give you an example of how the balance sheet will look. So my first balance sheet item is cash. Once again, I'm going to press equals and go grab it and press enter. And then equals, and then I'm going to go grab the accounts receivable and press enter. So that should give you an idea of what I expect to see. How will I know whether you put numbers or cell references in? You guys are going to copy your formulas over to another tab, and that's where I will locate it. If I did a control tilde function right now, I'm going to hit control and tilde. It turns it all into formulas, and this is what I expect to see. No numbers. I will be looking heavily at that, so I hope you're listening. Control tilde is a toggle switch, which means if I hit it again, my numbers are back. So that's what I expect you to do. After you get the worksheet to balance, and there's always check figures given to you in the handouts, then you're ready to prepare the financial statements. So give me a second and I will be right back to talk more about those financial statements with you. So after you get the worksheet to balance, then you're ready to prepare the financial statements that will go out to the outsiders. So these slides will just help you help you recollect what the financial statement should look like. Because we're using a periodic inventory system, you need to compute the cost of goods sold. And the cost of goods sold looks like this. Beginning inventory plus net delivered cost of purchases minus the ending inventory is going to give you cost of goods sold. So you may be wondering, well, what exactly does the net delivered cost of purchases equal? So here's the net delivered cost of purchases. We calculate it by taking purchases plus freight in, less returns and allowances, and less discounts. Looking at the set of data you have, your life will be made a little bit easier because I don't think we have freight and I don't think we have those contra accounts. But I just wanted to go over that with you in case you encounter those things on a future problem or on an exam. So once again, here's what it would look like, and this is what I would expect your cost of goods sold section to look like. You're going to take your beginning inventory, you'll add in the net delivered cost of purchases, which for us is going to be just purchases. That will give you the cost of goods available for sale. You'll subtract out the ending inventory because of course that wasn't sold, and that will give you cost of goods sold. Okay, so further directions in your handout will tell you that you're going to create a set of financial statements, and when you do that, again, it should be 100% cell referenced. So what I mean by that is I'm going to go to cell A1 and I'm going to press in equals. I'm going to go grab the worksheet and I'm going to go grab the Sports Haven name. And I may call it financial statements or income statement because I don't expect that to change from month to month. But I do expect the date to change. So once again, I'm going to cell reference it by grabbing the date from the income statement. Okay, so we are ready to begin. So we start our income statement with the sales account. And once again, you can spell it out or you can go grab it from the worksheet. So my account was called income from sales, I can go grab that. And more importantly, make sure you grab the numbers, because if those numbers change on the worksheet, we want your financial statements to change. So I'm going to go grab it. Equals, I'm going to go grab it from the worksheet, and here it is. We want to make sure we pick up the adjusted number, so I'm going to go grab it. Okay, so because we're grabbing numbers, I want to take you to the worksheet one more time and talk a little bit more about that income summary account. So let me do that now. On the worksheet, both of these numbers here, I'm going to put them in red. Both of those numbers need to be carried over to the income statement because one represents beginning inventory and the second represents ending inventory. And you're going to use that in cost of goods sold. So that's going to be the one line item where I grab both numbers instead of the net number. The net number doesn't do us any good because that number doesn't show up on the financial statements. But these numbers do. So now I'm ready to calculate cost of goods sold. And again, I'm going to 100% cell reference my work. So my next section is going to be called Cost of Goods Sold, and you have a slide on what this should look like. I'm going to start off with my beginning inventory, and then to that I'm going to add in my net delivered cost of purchases, but in this case that only is comprised of the purchases account because they don't have freight in and they didn't have any contras. And that gives me cost of merchandise available for sale. And I'm going to subtract out my ending inventory. And that will give me my cost of goods sold or cost of merchandise sold. And I'm ready to cell reference. Again, 100% of those numbers should come from your worksheet. So once again, I'm going to go grab my beginning and ending inventory, which is sitting in the income summary. So here's my beginning inventory. Here's my purchases. Everything's going to be pulled from the worksheet. That's going to give me my cost of goods available for sale. So I'm going to sum those up. My ending inventory is going to be subtracted, and once again I'm going to pull that from my income summary accounts, and finally I'm going to wind up with my cost of goods sold, keeping in mind that I have not made the rest of the adjustments. I'm just demonstrating to you how we're going to go about doing that. The great thing is once I go make any changes to my worksheet, because 100% of this is cell referenced, all those numbers are going to carry over. Let me show you what I mean. I'm going to hit Control tilde, and 100% of my formulas are referenced. Okay, that's what being flexible means. Okay, so you're going to continue on. My next major line item would be gross profit. And of course, this needs to be clean. I expect to see the title centered, and you learned how to do this in all the individual lessons that we started off with. I expect to see you guys using proper format. You want them to look nicely or look nice. You might want to include some shading. You might want to include lines and borders. Of course, you want to put dollar signs in the appropriate place. And since I don't need decimal points, I can get rid of those. So I expect your financial statements to look neat, and I expect them to be 100% cell referenced. So as always, complete the problem according to the directions. Take the time to double check the requirements. Make sure your work prints out properly. That means that worksheet should print out on a single page by itself, which means you need to format it properly to be able to do that. Your financial statement should either fit on one page or 2 pages, but make sure that they split in appropriate places. You wouldn't split an income statement in the middle of it, nor would you split a balance sheet in the middle of it. So after you've double checked your work to make sure you completed all parts of the problem, upload the Excel file to me through Canvas and check to see if there's any discussion posts that need to be done for this problem or the combination of this and another. And as always, if you need help, you know where to get it. Email me, come into the staffed accounting labs, come into my office, or consider posting your own discussion question for the class to help you with. Until we meet again, see you later.